welcome to the Mortgage Rate Weekly Market Update for the week of July 31st, 2017. Hello, I'm John Thomas with Prime Residential Mortgage, here to give you your update. Well, last week we did see mortgage rates move slightly higher. If you take a look at the bond chart on the screen, you can see that mortgage bonds failed to close above the 50-day moving average on Monday and just sold off. You can see with the gap down there on Tuesday, sold off and came back and hit right at support, that bottom blue line. And then we were able to rally off support for the rest of the week and have a nice green candle on Friday, but we closed right below the ceiling of resistance, and we're kind of stuck in that channel between the two blue lines. And with failing to close above the 50-day moving average and ending Friday right below the 50-day moving average, that's going to act as a tough ceiling of support. So we're going to recommend locking your mortgage rate, lock in the gains you've got, great rates, almost close to the lowest they've been all year. So take advantage of that, because if they fail to rally above that 50-day moving average, they could be turned lower again, which would increase mortgage interest rates. Now, if we dig into the economic news, big news last week was the Bureau of Economics Analysis reported the first reading of gross domestic product, or GDP, for the second quarter of 2017, and it was a solid 2.6%. Consuming spending was the driver behind the increase in GDP, as it rose 2.8%, and government spending also rose 0.8%, which helped the GDP as well. Now, the GDP for the first quarter of 2017 was revised lower from 1.4 to 1.2%, so not a great number there. Then we saw the Federal Reserve had their open market committee meeting last week, where they discussed whether or not they were going to raise short-term interest rates. They actually left the federal funds rate unchanged, so they didn't raise anything. But they did discuss that in the September meeting, they would probably start the asset tapering program. So they're going to stop reinvesting the runoff from the balance sheet and just let it run off. So they won't keep reinvesting. So they have going to try and shrink the Fed's balance sheet, which is a sort of quantitative tightening, the opposite of quantitative easing. So we'll have to be on the lookout for that. And they could also raise the Fed funds rate in September or in December. One of those two meetings is what it looks like they might do, because the Feds are worried about inflation. Then we saw weekly initial jobless claims were released on Thursday. They were up 10,000 claims from the previous week to 244,000 claims. Now again, well below the 300,000 claims mark, so another strong jobs report. Last week's claims of 234,000 was the one for the sample week, which will be used in the jobs report that comes out on Friday for July. So we'll be on the lookout for that. It should be a very strong jobs report. Now, in the housing news, we saw new home sales for June 2016 edge higher by 0.8% from May to 610,000 units. New home sales were up 9.1% from June of 2016, which is a very strong number and shows new home construction is doing very well. Now, we also saw existing home sales for June 2017 reported by the National Association of Realtors on last Monday, and they fell 1.8% from May to only 550,000 units on an annualized basis. Now, existing home sales are only up 0.7% from June of 2016, which was the second lowest reading of 2017. Now, the decrease in existing home sales is because we just don't have any inventory. The lack of inventory, we have the demand, not the inventory. We're at a 4.3 month supply nationally of homes for sale, and homes for sale, the supply has fallen for 25 consecutive months. A normal supply is 6 months, so we just don't have the inventory, so we can't have the sales. We have the buyer demand, so that's pushing up home prices, which are up 6.5% from June of 2016. Now, we saw the Case-Shiller 20-City Home Price Index for May was released. It showed home prices were up 5.7 from May of 2016. Demand continues to outweigh supply in most areas of the United States, so home prices continue to rise. They're actually outpacing inflation and wage growth. Now, in the local news, the next free first-time homebuyer seminar is Saturday, August 19th. That is 10 a.m. to noon in the Newark Christiana Hilton Hotel. Now, you can register for that event by giving us a call in the office at 302-703-0727 or register online, www.delawarehomebuyerSeminar.com. Look forward to seeing you guys next week.